And good morning. This is Mary Ellen McGonagle, and you're watching the MEM Edge Show. And this is the show where we put you in front of where the action is in the broader markets. And certainly we are, as always, seeing quite a bit of action in the broader markets this week. So let's go ahead and get started and review what we are going to be going over today. The first item, as usual, we are going to go ahead and take a look at the current markets. It's really important as an investor that you have a good feel for how the markets are. Are they in a healthy uptrend? Are they in a position where you can benefit by putting your money to work? So we will go ahead and take a look at where we are with the markets. And then from there, we're going to take a look at where you can find what I call momentum in this vibrant market. We are going into well over, actually, the NASDAQ has been up for 10 weeks in a row, really quite powerful. And with that, there's quite a bit of what's called momentum. We're seeing a lot of stocks that are hitting new highs in price. We're seeing quite a broadening out in this market. So I'm going to give you some tips using StockCharts.com to help you get in front of where the faster moving stocks are in this market, so you can take advantage of that. And then we're going to take a look. There are a couple of stocks that are still have their earnings reports that are due out. The earnings season, of course, is trickling down. We're getting toward the end, but there are a couple of stocks that we can look at that are due to report. We're also going to take a look at some stocks that have already reported. We've seen so much in the way of stocks that are coming out with numbers. They're not necessarily great, but the markets are loving it. So we'll take a look at some stocks that have already reported as well. And then we will take a look at current strength. We are seeing a pickup here in biotechnology. And I'm not necessarily saying that you should play the move into biotech, but it's more of a way that you can get in front of where current strength is in various parts of the market. And again, we're going to do that using StockCharts.com. So let's go ahead and get started. I talked about viewing the broader markets and getting a good sense of where we are. So what we're looking at here is a daily price chart. This is the S&P 500. And for those of you that watch the show weekly, you'll know that I like to overlay these simple moving averages on top of the price chart. Really quite powerful. So what I've done here, this green line is a 10-day simple moving average. The red line is a 50-day, and the blue is a 200-day simple moving average. Quite simply, these lines are smoothed out versions of the last, for instance, with the 10-day, this is the last 10 days of price action in the S&P 500. So what I did want to point out here is very clearly how we are remaining in this uptrend. And for those of you that follow the markets closely, you'll remember this is taking us back to the end of December when the markets entered into bear market territory. But since then, of course, we've seen a very nice downtrend reversal with this index coming back up through these simple moving averages in bullish fashion. And your most recent bullish action, actually two items. The first is when this index, the price broke back up above that 200-day simple moving average, and that was viewed as a potential area of resistance. So we did break up above that. That's about 2 weeks ago. And more recently, with last week's action, we were able to break up above that 2,800 level. That was viewed as the next area of resistance. We're at 2,813 now. So when we break up above these potential areas of resistance, it's freeing the markets, and in this case, the S&P 500 is now more liable and more possibly, the possibility is greater that the uptrend will in fact continue as we continue to break up above these potential areas. Also, I've overlaid up here on the top what's called an RSI. That's a relative strength indicator. You want this indicator to not only, of course, be heading north, but to be above this net dashed neutral, above that 50. And we are very much in an uptrend with that RSI. You like to see that, of course, in conjunction with the uptrend in the broader markets. Down on the bottom, I have what are called stochastics, and these are another momentum indicator, but really quite useful if you're looking at the broader markets. Again, you want the stochastics to be above that 50, and we are currently now above 80. And when we do get above 80, it indicates that the markets, or in the case if you're looking at a stock, it is in a position of what's called overbought. And that just is telling you that at some point there's an anticipation that in this case, the S&P could very well pull back a little after being in that overbought. But we can see we've been in this overbought position for the most part of this year. So it can certainly stay and retain up above here. What you want to, of course, be on the lookout for as far as negative, when the stochastics break down in line with the potential price. I'm taking you back to October, and we can see that in line with the index breaking down below key moving averages, your stochastics were trending negatively a bit prior to that, giving you a bit of a heads up. But for now, we're in very good standing. Stochastics are in overbought, but heading north. So uptrend very firmly in place. So for those of you that are fully invested, for the most part, we are in good standing, and it's with an anticipation over the near term of a continuation of this uptrend. Now let's go ahead and drill down beyond the broader markets and take a look at some of the industry groupings. And again, for those of you that have watched this show weekly, you'll know I like to take a look at what's called candle glance, and this is providing you with a 2-month price chart of any given ticker symbol index. So in this case, you can go down to the bottom of this candle glance. It's accessible from the front page of StockCharts.com. And down at the bottom is where you can populate the various, in my case, indices. I like to use the sector ETFs. And from there, we go ahead and add an indicator. I've added the RSI, a relative strength indicator. Certainly you have many different choices, but for our purposes today, we want to see relative outperformance. So I've done that RSI, sorted it by descending. And so in essence, it's going to provide us with a really clear-cut sense of where the strength is. We are going upper left, strength to weakness. And let's go ahead and take a look. XLI, that's the S&P industrial sector. And we can see it's up here in the forefront. And in fact, year to date, industrials are up quite a bit. They are up the most, and really what's driving those industrials are aerospace and defense. Super strong area in the broader markets, carrying on the strength that they experienced last year. But let's go ahead and move on, because we can see that technology is in the second position as far as relative strength. So we are seeing a lot of strength within technology. And that, of course, takes us right into the NASDAQ. The tech-heavy NASDAQ is currently the leading of the broader market indices. We have the NASDAQ, the S&P 500, and the Russell. I will tell you that the Dow was up in the forefront prior, certainly in earlier weeks, but we are seeing technology move to the forefront, which in turn is helping with this NASDAQ, which is in very good standing in line with the S&P 500. And so as we drill down, we can see that the more defensive sectors, and by that I mean the consumer staples, real estate, those are REIT, real estate investment trust, high yielding, they're starting to fade a bit here as these higher growth areas of the broader markets start to move to the forefront. I did also want to point out, we talked about how we're going to be taking a look at the strength in biotech stocks, how you can potentially uncover stocks within that grouping, but take a look at where the biotech index is positioned. We can see it's up here in the forefront, and I will tell you it has been moving after being down in a very weak position. So we can see this is a daily price chart. We can see certainly over the last week, plus that we are starting to see a pickup here in some of these biotech stocks. So that is your broader markets. And then we've gone ahead and drilled down into where the strength is within the markets by these sectors. Let's go ahead. And what I did want to do is go ahead and give you a sense of where we talked about identifying where the momentum is in the broader markets. So what I will do from here is take us from StockCharts.com. We are going to go to that first page, and I will give you some tips to help you navigate the markets, and again, more importantly, identify potential candidates. So what I'm doing here is scrolling down, and we have a lot in the way of charting tools and preset screens that are here for you. But I do find a lot of relevance down here when we get into market summary, sector, industry summary, and Scooter reports. Scooter stands for StockCharts Technical Rating, very powerful. But for today, I'm going to start out by taking a look at the sector summary. And this is a really helpful tool because it not only helps you on a daily basis identify where the strength is, I like to take a look at it on a weekly basis. That weekly basis is going to be more insightful, provide you a bit more information that is going to point you toward groups that over the last week have outpaced and done well, with an eye toward a continuation of that outperformance. So we can see over the last week, the energy grouping has done quite well, financials, so forth. What I'm going to do is go ahead into technology. We talked about technology leading the broader markets, in turn pushing the NASDAQ higher. So what you can do from here is go ahead and click on to that technology. Again, this is that weekly snapshot, and it just takes a matter of minutes. This is something that you can do. If you do this on a regular basis, it will be very revealing to you as far as not only where the strength is, you'll see a continuation. And so what we are looking at here are the sub-industry groupings within technology. And what I wanted to point out to you here is telecommunications equipment over the last week was up 0.85, as last week the broader markets were a bit flat. So this is a very big relative outperformance. Interesting. So what we can do from here is go ahead and click onto the name of that sub-industry grouping, and it will then sort it by performance going down on this weekly basis. Very interesting. But what I like to do from here is sort the sub-industry group list of stocks by that StockCharts technical rating. Very, very powerful rating. I talk about this, how with my work, I do a lot in the way of running screens, constantly looking for that next big outperformer. And oftentimes, really all I need to do is go here and sort the stronger groupings within, for instance, technology, and sort it by this Scooter rating. And sure enough, here are your leading stocks within the telecommunications. Now, I'll tell you why I'm looking toward telecom for some of these potentials. Let's go ahead and pull up a stock here as a, for instance, we can look at Ciena. This is a big player, if you will, within the, in fact, this stock, I'm tying it in because they are due to report their earnings this week. But getting back to telecommunications, move into what's called 5G, and that has everything to do with broadband. It's 5th generation, and it's really going to be quite powerful as far as allowing information and data to be delivered and dissected very, very quickly and rapidly. It's going to be a real game changer. So when we look at that, for instance, we're looking at Ciena. This is a daily price chart. This is a networking stock, but what we want to see is this very clear-cut uptrend. And we can see that the stock has advanced. It's finding support at this upward trending 10-day simple moving average. We talked about the RSI. You want it to be above that net neutral 50. At this juncture, the stock is a bit what we talked about overbought. It's up above that 70, but more recently it's pulled back quite nicely to this 10-day simple moving average ahead of their earnings release. At the bottom, I have what's called MACD, moving average convergence divergence. What you want to see here is the black line up through the red, all while occurring above this net neutral 0. So we can see MACD did turn positive with the broader markets, taking us back to January. And you want to also see your other key simple moving averages in an uptrend. And we do, in fact, see that. So Ciena, of course, it is due to report earnings this week. As a rule of thumb, I tend not to buy stocks going into earnings. We've seen a lot in the way of blow-ups. We've also seen gaps up, but just a lot of volatility around earnings. So I would suggest that you put this on a watch list and keep an eye out for it beyond earnings. But let's go ahead back to that scooter rating. We're back in the technology and telecommunications. And by simply hovering over this symbol, you'll get that thumbnail snapshot. So we can see Ubiquiti, UBNT, another big winning player in this space. But we can also see quite quickly that the stock has already hit a new high in price. So you might want to drill down and take a look at some of these other stocks that are a little less advanced, and potentially they do have that high scooter rating, which is telling you that the technicals are supporting a potential upside move. But as we drill down, again, we're on the prowl for stocks that perhaps really haven't advanced quite as far, making them potentially a bit more compelling. So hopefully you're able to see and get a feel for how you can, once you've identified where the strength is, you can potentially find ideal candidates. This is GLW Corning. The stock is poised to break out of a rather long base. This is about a 4-month base gap up here. Now, I'm not certain, but I would suggest that that was on earnings, your primary driver of a stock's uptrend. And the stock has continued to find support at this upward trending 10-day simple moving average. Your RSI is positive, as is your MACD. So another potential candidate here. Within the, we were able to identify where the momentum was and then drill down from there. So let's go ahead and take a look. I talked about a couple of stocks that are due to report their earnings this week. And one of them is a discounter retailer, TJX. So this particular stock, as we advance into earnings season, and we are getting toward the end, a lot of retail and consumer related stocks are reporting. So this is an example of a stock that is due to report this week. And what I did want to, actually, TJX already reported last week. I apologize, but this is their gap up here. They had a good report. Another stock that is a competitor to TJX is due to report, and that's Ross Stores, ROST. We're looking at a daily chart of Ross, and they are due to report tomorrow. And the outlook is promising. We can see the stock is really just marking time ahead of earnings. But again, oftentimes when stocks have this back and fill period, you'll see their MACD just trending downward. The stock could very well advance, but again, as a rule of thumb, you're not necessarily paid. But I also wanted to point out to you some of these stocks that did report last week that are in this retail space. This is JCPenney, a large retail department store, of course, stock. And we can see that the stock gapped up here. The numbers really were not terrific. JCPenney is not in a very healthy position. So we can see where the stock did gap up, but take a look at this 200-day simple moving average. It's very much in a downtrend. There's certainly, it's also a $1 stock, which would not make it as compelling. We can certainly look at other retailers that did report last week, and DDS, Dillard's, another retail department store. Here's another one that gapped up on the numbers. And when you see a stock gapping up and it broke back above that 200-day simple moving average, oftentimes if that is gap up, uptrend is going to fail, it will do so quite quickly. And we, in fact, are seeing that take place here. The stock is giving up a lot of those gains and now broke back down below that 200-day simple moving average. So not very healthy at all. So we can take a look at another company, Urban Outfitters, due to report this week. Now, this particular stock is not healthy at all because we're looking here at a daily price chart. The stock's price is below all of these key simple moving moving averages, and we can see that the moving averages are trending downward, and that is very clear-cut downtrend, and it makes a possible reversal or advance really quite difficult, because you can see where the stock tried to rally a bit last week, found resistance at that downward trending 50-day simple moving average. So we can see that unlike this prior period back here last spring, the stock was firing on all four cylinders, coming out with good numbers and finding support at upward trending simple moving average. Of course, this is what you want to see. So can be on the lookout for their earnings report. They are due to report tomorrow. ANF is another retailer, Abercrombie and Fitch. And this particular stock is in a little bit better of a position. We can see the stock price is above these key simple moving averages. Your MACD, we talked about that black line crossing up through the red, and it is above that net neutral zero. So this one, of course, it's down 3% today, but there is a side note. This particular stock does offer a pretty healthy yield. It's a 3.6% yielder, not particularly enamored with the action today, but certainly worth keeping an eye on. If it can come out with some good numbers, retain a presence above this 200-day simple moving average, certainly would be worth, could be interesting. So what I'm going to do now, I talked about how we are seeing a bit of strength in some of these biotech stocks. So one of the clear-cut ways that you can stay on top of a move such as that is going back to where we were earlier as far as keying in on those sectors. So what I'm going to do here is go ahead back down on, this is from the initial StockCharts.com page, and go back to that sector summary. And we talked about using the weekly view to give you a bit of a longer view, if you will, of activity in the broader markets. And we can see that healthcare really over the last week, it is down. And for those of you that follow the market super closely, you'll know that last week was super tough for a lot of within this healthcare sector. We can go ahead and click onto that grouping and we can see these healthcare providers. Let's just take a moment here. And what I wanted to show you is going again back weekly. As we drill down, you'll see a lot of well-known names in these healthcare providers. This is Molina, Humana, United Health. These are all, take a look at really how hard these stocks did get hit. That has everything to do with the reintroduction of what's called the Medicare for All bill, and it's going to negatively impact some of these insurers, these healthcare providers. So what I'm taking a little bit of a detour here, but I think you'll find it worth it, because what I'm going to do here is go ahead and pull up United Health Group, because by and large, experts are anticipating the possibility of that bill being passed as not the case at all. So there were some Wall Street analysts last week that were suggesting that investors could be buyers on this dip. And I would argue with that. This is where these charts are really going to be powerful and help you with your decision making, because while as a fundamental point of view, Wall Street analysts will tell you that this stock is cheap, that you can buy it. We can see that it's down another 2% today. So before even considering entering and potentially buying some of these large insurers that got hit last week, you are going to want to pay attention to the charts. We're going to need to see the stock price similar back to this action with a lot of stocks at the end of last year when they started to reverse their downtrends. Your first signal is going to be a break back above this 10-day simple moving average in line with an RSI that's not only trending upward, but ideally you want it to be breaking back above that 50, and that is in line with, at the same time, the stock breaking back up above that 50-day simple moving average. Your MACD did have an early signal with that black line up through the red, but it's not until we get up above this net neutral that it's telling you that that downtrend has reversed. So we can see, as of, for instance, with UNH, we are not even in close to that position. The other thing you want to key in on here is take a look at this huge volume during last week's sell-off. That volume is telling you that institutions want out, and it's also a signal potentially for more downside. So you want to see that volume as the stock continues to potentially decline. You want to see that volume dry up, telling you that the sellers have emptied and their positions and the selling is behind you. So that's just taking a note there. But let us go back. We want to key in, as I talked about earlier, on potentially biotech stocks. So again, using this weekly view, we're looking at the healthcare sector, and now these are those sub-industry groupings within healthcare. And taking a look down here at biotechnology, what you'll do is go ahead and click on, this is what we did with telecommunications. It's going to provide you with that weekly performance. So take a look at this. This is actually within biotechnology, there are over 500 stocks. So if you were to do this even on any given day, you will see huge gaps up. And a lot of it has to do with FDA clinical phase trials that are coming out positive. And so this is really indicative of what you'll see. But oftentimes these stocks are not particularly healthy. So what we are going to do from here, when we go ahead and get into, as a, for instance, biotech, you will want to sort it by either scooter. These are going to be your big, technically sound. What I like to do is sort it within biotechnology by the market cap, because by and large, your larger market cap stocks are going to have earnings. These are going to be your more advanced, certainly your more sound companies within biotech. And then from there, you can take a peek within these large cap names at these scooter rankings, again, with an eye toward a higher number. The higher the number, of course, the better. And so what we can do is go ahead as a, for instance, take a look at Regeneron. It's a larger company, has close to 80 on the scooter rating, very healthy. And we can see that the stock is very much in a clear-cut uptrend. It's trending upward above this upward trending 10-day simple moving average. We can see the RSI and the MACD both in positive territory. So this is one way. We can go ahead back to that list and take a look at another stock within this space. I'm going to go ahead and sort it by market cap again. Go ahead and drill down into those larger stocks, again, with an eye toward companies that are a bit larger, that they have actual earnings in place. And we can take a look at Alexion, ALXN, as a, for instance, and this is another example of a larger stock that is, again, a bit more, they will have earnings in place. And we can see that the stock is poised to break out of a very long base. So what I'm going to do here is go ahead and pull up a weekly of that very same stock, and it's not as healthy looking on the weekly chart because it does have this longer term downtrend. So for those of you that use charts, you will want to look both at daily and weekly. I'm going to leave it at that. For those of you trading this week, happy trading.